Now, how about on who we're not allowed to vote for? An unelected board called the Federal Reserve. You know, this topic. This topic, you said, what my generation, what I feel, what I feel doesn't matter. But I mean, you generalize what my generation feels. They're not trusting of, never mind elected establishment, unelected establishments. How have you thought about that within the context of where we're going to go to next? Does a president have to have an opinion on the Federal Reserve? The Pauls have had explicit anti-Federal Reserve rhetoric, which one of the 35 Republicans running for president should probably bite onto. How do you put that all kind of inside of your head?
Well, I mean, I'm asked often to do two things. One is to predict what the Federal Reserve is going to do, and the other is to say, what would I do if I were the Federal Reserve, which are two completely different things. As terms of political interference with the Federal Reserve, I mean, I'm wary. You know, I mean, God, where could that lead? Mm-hmm. I mean, countries where a democratic elected political leader actually actively intervenes with monetary policies, I think there's a high correlation with ineffective, economic leadership. Mm-hmm. If you look around the world, so that's kind of where I'm very cautious about that. Mm-hmm. If you were to ask me to predict what the Fed is going to do, I think that they are going to do their usual feint. It's like Charlie Brown and Lucy with the football. So I don't think we're going to see a rise.
No rate hike.
I don't think we're going to see a rate hike. But you see, the Fed is in a real problem. They need to say that not too far down the road, rates are going to go up. Because if they don't say that, what are they saying about the economy?
Exactly.
So they have to be positive, but it's an oasis just beyond the time we have to act.
And we're still data dependent going towards the oasis.
Exactly. We're still there, but I have to say it's going to go up, because if I said that, then I'm basically saying that the economy is just going to stay in the toilet indefinitely. Right. So they have to say, but it's never quite the right time, and they're extremely risk averse, and I think they realize what the consequences are. I think if they start pushing up rates, think about it, the dollar's going to go up, the corporate profit share of GDP is going to start declining. They're going to have to compete with, the PE values are going to be changed in comparison with the long bond. Everything is going to go negative, and I think there could be an enormously negative reaction in the stock market. If you ask me,
a rate hike would be a mistake.
Well, that's another question. You asked me what I predict that the Fed could be. If I were a philosopher king, and I could just say, what I would do. I think they should do it regardless of the market reaction, because I think we need to go through that.
You have to go through.
And the terrible thing now about the inflated value of so many of these, so much of the stock market and bonds and so on, is that it's a real injustice to the younger rising generation now, because it is so expensive to invest in the future of America. And people always forget, but if the S&P 500 went down by 50%, it would be horrible for a lot of us. But think of the gift to younger people who could actually invest in the future of America at reasonable prices.
I mean, how about let's flip to real estate. I mean, real estate, it's not like you're seeing value there either. A lot of people could argue that 0% or free money forever perpetuates higher asset values, including real estate. Yeah. We have the highest rent in the country's history. We have the highest exposure, if you look at the median household's income versus expenses, the highest exposure that rent's ever been, and it's the biggest piece of the pie. I'd argue that it's driven inequality. It's not just me, that's a pretty easy argument to make. How do you think about real estate within the context of the current political structure?
I think real estate, real estate, commodities, I mean, everything sort of follows the same trend. The rate of return declines, and in other words, the price goes up so high that it has this very low rate of return. Here's what scares me about what's going on. It's that it's with the high rate, with the high valuations of the stock market, the high P ratios and so on. What scares me is something called Tobin's Q, which is the market value versus the replacement rate of corporate assets. And here's what scares me, is that corporations are making so much money now. I mean, their share of GDP is high. The actual return of corporate profits on the actual replacement value of their assets is very high. And yet we have real interest rates that are practically razor thin. And the only way you can explain that is by saying that much of these corporate earnings are not, I mean, what there ought to be right now is everyone ought to be investing. There ought to be just this massive amount of investment. Everyone ought to be trying to compete with these corporations, right? Because I could raise money for nothing with interest rates so low, but it's not happening. So I think what really is happening, this is what's just disturbing me, is that much of what corporate earnings actually represents rent. This is economic rent. These are privileged positions where they don't want to expand it. It's kind of monopoly pricing.
Yeah.
So you look at finance and banking, you look at big pharma, you look at so many of these industries, you look at the very poor rate of new business startups right now. No one's trying to compete with these businesses, except if anything, to be they're starting businesses that can be bought up by Google and Amazon, right? I mean, that's the goal now.
Yeah.
So it's scary, and I think that is one reason why I think our whole political system has to be reshaped to create a competitive landscape where we can have actual growth again.
Yeah. You've never had, like in economic terms, as you know, the Gini coefficient in the U.S. has never been this wide. So the high versus the low. In the state, I think the state of Connecticut has the highest Gini coefficient potentially in the world. Obviously, if you go Greenwich to Bridgeport, and it's sad. I mean, it really is. But I'm kind of getting tired of all people, leaders, fully loaded in my business, politicians whining about it, but still perpetuating the policies that created it. So, is there a political breaking point there? Is somebody just going to get up who is not Donald Trump, who might sound a little less like Hulk Hogan, and call that like it is? Do you see any of that developing? Because you'd have to take it from corporates to give it to people. It's pretty straightforward.
Well, I think you need to do a lot of things. I think you need to redesign the system from the ground up, and this really gets into the whole subject of the fourth turning, which we've talked about. It's more than just another recession and recovery. It has to be a changing of the political playing field and a leveling of the playing field, and that's going to come with boomers and Gen X. That's why the great thing about Gen Xers is that they are the wrecking ball.
Yeah,
they're just going to tear all this stuff down.
Well, you can't tear it down without taking a lot of the things that us Gen Xers own down. That's if I meet with 1,000 institutional investors, there's 10,000. Oh, but that's bad for this, and I own that. I mean, there's such an inherent apprehension.
There is, but there's also so few trustworthy connections they have to any institution that's defending the current order.
No, exactly.
That's what's kind of interesting.
So Hillary turns around and says, well, look, because how I'd say you do this is much like the Reagan moment with Volcker, where all of a sudden, okay, all you crappy lenders, borrowers, high cost of capital businesses that wouldn't earn anything with a real risk-free rate, you're going to get eviscerated and you're going to not like it.
Right.
There's that way to do it, which would happen pretty quickly. We'd have a steep recession in 1981. Or there's the Hillary solution, which is, you know what? The answer here, there's a pretty good case to be made that she's going to run on a national minimum wage campaign, 15, 20, 30 bucks an hour.
Right.
That's how I structurally change it.
Right.
I take it out of the corporate and I give it to you. It's a purely made for central planning move. And I sit here and I think, is the population dumb enough to accept that? It's so bad for corporates.
Here's where it's going to play out, because actually if you read between the lines on what a lot of top Republicans are saying, the Republicans themselves are arguing for a new, more honest, more targeted role governments could play. Look at Ryan's, for instance, budget. He's actually looking at, okay, we need EITC. We may need to expand it. We do need to do certain things with government, right? But let's do the smart things. Let's not do the dumb things. Increasing the minimum wage at these prohibitive levels is going to have catastrophic impacts on employment.
What if she makes that? What if she makes that one of her top priorities? Won't people vote for it? There's like there's three quintiles that I could think of. Anyone who makes less than $75,000 that will appeal to them.
Well, yeah, but Americans don't just vote their pocketbooks, as you know. Otherwise, Republicans wouldn't pick up so much of the red zone states.
So do you think that'd be a risky thing for her to go with?
I think it would be, because I think Americans have never really voted for, spread the wealth or redistribution as candidates. So we didn't vote for Father Coughlin and Huey Long, back in the mid-30s.
Yeah.
We didn't go that far.
If you were to say, if there's one thing that could knock her out, people are like, yeah, she's still the lead contender.
I'll tell you one thing
doing something like that?
No, one thing would knock her out is an intelligent electable Republican candidate. I mean, that's what would knock her out. It's the alternative that's going to knock her out. And what you need is for a Republican to say, we believe in individualism, we believe in all this stuff, we believe in a competitive marketplace, but to make it work, given where we are, we need government actually to play a role in supporting low-income families and getting people out of where they are that we're not now doing. And
but she's not going to, like in the Democratic, if Bernie continues to trend, she has to first knock out the very hard left, which is going for minimum wage.
Right. But that's the same problem on the Republican side, right?
Okay.
So the Republicans have to play to that side too.
Yeah.
I don't know. It's going to be really interesting.
It's going to be exciting.
It's going to be interesting to see how that turns.
Final topic, healthcare. Very few people would, I mean, maybe all your fans would know this, but one of the first books that you ever wrote was with a person that Wall Street knows very well, Pete Peterson. Yeah. You predicted that healthcare would be, did you say 20%?
20% of GDP by the year 2020.
Tracking online.
It is.
That's a pretty good call.
When we were one of the first ones, that book came out in 1988. It was called On and Borrowed Time. It was re-released in about the year 2000. But we were the first ones to put those charts showing Medicare, Social Security, and Medicaid and all these programs. The year in 1990, 2000, 2010, 2020. Healthcare is 20% of GDP. When we came out with that, people looked at that and they said, "You're crazy. Our economy would never sustain that." We are now perfectly on the glide path. And I will say this, that after remaining relatively stable as a share of GDP over the last several years, and by the way, healthcare has always decelerated and kind of reached a plateau rather than its usual trend, which is to grow as a share of GDP after every major recession in the last 30 years. And so the recent stabilizing of healthcare follows that pattern.
It's pro-cyclical.
It's kind of lagging cyclicality. But anyway, healthcare is again on the move. And ever since the last quarter of 2014, hugely into this quarter, and as far as we can see, the second quarter, it is suddenly hugely rising again. Mm-hmm. So healthcare is now, I think, something in the last count in April or June, it was 18.4% of GDP. So it's rising again. In fact, healthcare now is more than any other part of our economy is responsible for positive GDP growth over the past 3 quarters. And in fact, if it weren't for healthcare, we'd really be worrying about GDP growth. Yeah, it really is.
I mean, if you look at healthcare is one of our favorite sectors, but the relative revenue and earnings growth, even this quarter, if I were to just go off what's in the top of my mind. I mean, quarter to date, you're halfway through the quarterly reporting season. You got down earnings in industrials, down revenues in industrials, energy-based materials, but healthcare's got revenues up 4% and earnings up 8%. Yeah. So it's the first, and this is where typically a sector gets a premium multiple when it's got the relative growth working for it.
Yeah, totally.
And a lot of people say, well, you're making the case that it's different this time in healthcare, whereas I'm talking to the guy who's actually said in 1988 that it was going to be different for a very long time, and it's actually just gravity that's changed this.
Well, a couple of things. First of all, it's been long enough after the recession. We've seen this pattern. I don't know if you remember the mid-1990s when all the HMOs were being pushed in, remember, and everyone was saying, well, we've stabilized healthcare, and then, of course, it began to skyrocket again. I remember Margaret Heckler, back in the early Reagan years, this was 1984, when she said, we have slain the healthcare inflation monster. I don't know if you remember that. She said, we have slain it. Healthcare is now going down. Oh. That was after the 82-83 recession. Okay. So this is an old pattern. We always temporarily say we managed it. What's happening now is, in addition to this typical pattern we see, kind of, a while after recession, then growth, but it has extra kickers, obviously. Boomers getting older, right? They're kicking in, and with all their Medicare and Medicare, Advantage programs and so on. Obamacare has now been cleared by the courts, so all the insurance companies and all the people are saying, okay, this is for real. We can really invest in this. And the other factor about Obamacare with the guaranteed issue and community rating is that we've had an increase of 10 to 15 million people insured. So the big most profitable parts of healthcare now are the health plans and insurers who are taking on not the high end, but the kind of bargain end, the mass end of the market. And they're the ones that are they're improving. The very high end, the insurers, for instance, who cover the employer paid plans, particularly the high end employer plans, they're actually in the most trouble. Because the future is not in their direction. So that's fascinating. And the other part of healthcare too is let's talk about big pharma. Let's talk about Gilead. With $1,000 a pill. And I don't know if you saw the New York Times last week. They had a big cover story, feature story, page 1, about how Congress is getting motivated now to do something on the pricing of the pricing.
Well, it's amazing because in a deflationary world, or one that's morphing into one that people understand deflation as a risk, they can translate that to commodities. They can translate it to businesses that have pass-through pricing that are related to commodities, industrial products. They can't, or they don't want to get there. The healthcare investor does not want to get to the deflation story in biotech. They do not want to go there, obviously. Right. So that would be easily one of the top open the envelope risks if it were to be introduced. So that's interesting. So we've knocked down the pins. Healthcare, I said, was the last topic, but the last question I have to ask this question.
Okay.
The number 1930 gets people agitated, it gets people excited, probably sells ad revenues over here, over there. If you're to only answer the question from a demographer's perspective, what is the similarity between 2015 and 1930 in the U.S.?
Well, I put it a little bit more generally. I'd say, what's the similarities between post-2008 and the 1930s generally? Let's talk about an era. And I think it's extraordinary, the similarities. And as readers of our work now, these are both forth-turning eras, so they should have similarities. Mark Twain said that history doesn't repeat, but it often rhymes. And here we see a real rhyming going on. Well, what do we see? Well, obviously the economy, right? Fears of deflation, underemployment, underutilization of capital, a failure to grow, rotten productivity. I mean, all of the economic side's obvious. Look at Europe, particularly. Europe is suffering more in the last decade than it did in the 1930s. By now, Europe would have been above its GDP. It's still below where it was in 2007. So the economic part's obvious. But look at some of the less obvious similarities. It was a great fear of birth rate decline in the 30s. Well, we see fertility rates declining around the world today. They're declining in the United States. They're declining in most of Europe. We see that. And then we see, what about the geopolitical situation? The 1930s was the time in which the whole world was going in isolationism. People were pulling out of the League of Nations, most notably the United States. And these unruly autocracies were kind of taking over the world, right? These regional powers, the authoritarian governments. Well, you remember there was Japan, and there was obviously the fascist movements in Germany and Italy and so on, and there was Stalin, and there were. Well, we look at the world today, right? The global concert of power, the superpower which kept everything in line, is sort of, we're all in isolationist mode. And these regional authoritarian governments are calling their own shots. I mean, so this is another. In fact, I would argue this, that I have seen over the past 6 months, and I would argue this is from the presidencies of Singapore, Philippines, Taiwan, Israel, Saudi Arabia, Estonia, and Latvia. All of these leaders have mentioned the current parallel to the Munich Accord and Chamberlain, peace in our time, and appeasement, and obviously in Estonia, Latvia, with respect to Putin, and in Southeast Asia with respect to China and Iran, but I think people are aware of this now, right? That this is the area. But here's some other interesting parallels to the 30s. One of the things we saw in the 30s, really starting around 1931-32. Was at a time of extraordinary decline in personal risk-taking. There was actually a huge decline in the crime rate. What have we seen in the past 15, 20 years in America? The new GI generation coming of age in the 30s, also an upbeat, community-oriented generation, was engaging in less crime. What do we see with the millennials today? Crime rate is we've seen the most rapid decline in youth violence over the past 15, 20 years. And I live in Washington, D.C. I used to live in New York. There are areas of the cities now I can walk around where I never could have walked around. So the world is getting safer. Another fascinating trend, multi-generational family living, was huge in the 30s. It was coming back in America today, right? These families are all living together. I'd say that's one of the most underappreciated demographic trends in America today. One interesting statistic or factoid, the share of 25 to 34-year-olds living with either parents or older family members in 1980 was 11%. Today it's 23%.
Wow.
That's tens of millions of young people living with their parents. And it's not just the economy. They get along really well. You know, they do. I talk about this all the time.
It's cheap rent. You get along with your landlord if they're not charging you rent, man.
Boomers didn't want to live with their parents, no matter how cheap the rent was. Okay, they had greatest generation parents, and on cultural issues there was a gap this big. There's no gap with millennials.
That's really.
So you see their boomer parents, they sync their iPods, they watch the same movies, they buy the same brand name clothing, they talk about their personal lives all the time. One big issue when I go out, and I do this a lot, I talk to boomer managers about millennials in the workplace. That's a big issue now.
Huge.
How do you manage these kids? And one issue that always comes up is how these kids are always talking to their moms, the moms and dads. They're calling them up on the cell phone. And a lot of businesses are starting, bring your parent to work week and so on.
Yeah, that's really interesting.
So these are all changing. We could go on and talk about some of these, but these are what causes these parallels between decades is the types of generations entering each of the relevant age brackets. And that's why we see these similarities coming up.
With the economic overlays.
Yeah,
This is
of
amazing.
course.
I mean, this is, as are all topics that you address, it's we can go on and on and on. So I just really want to thank you for your time. If those of you have not read Neil Howe's work, I think he's written over at least a dozen books. I mean, if you add all the ones that he's written with Pete Peterson, et cetera, I mean, there's plenty. He owns the topic of millennials. He's the first on The Fourth Turning. That book alone, I think it was 1997, is epic in terms of its conclusions. The dog's tail that continues to wag is demography. So again, if you want to...
We're doing the update, by the way, and we're going to reissue Generations. So we're going to bring it all
great.
up to...
That's perfect. Because you got to constantly update it.
It's been a generation, so we have to kind of push everyone else.
I think everyone, including me, will thank you for that. He's Neil Howe. I'm Keith McCullough. That was a real conversation.